I'm so excited to be here with you tonight. Oh my gosh, wait until we talk about all the yummy, juicy details we have going on tonight. Hey, you guys, happy Monday. How's it going? I'm so glad to be here with you guys tonight. I could not wait. So let's talk about all the juicy details. Let me make sure, first of all, that you can hear me well. Let's check. Yes, you can. Okay, so you guys, I'm Garlinda Price. You already know. Broker and owner of Fusion Properties LLC, from the capital to the coast, your realtor for life. So tonight we are doing part 2 of our home buyer, home seller, investor seminar, because last week, oh my gosh, I got so excited. There was so much to share. I realized when I got off of there, I didn't even share everything. So let me run over here to Zoom, because you guys already know when you're a business owner, you are everything. You are the teleprompter machine. You are the backup dancer, the backup singer. I want to do that backup dancer thing with Marvin. I'm trying to convince him right now. So if you see this, honey, lamb chop, y'all tell him. Let's do that backup. I never knew love like this before. Okay. So anyway, tonight we're going to talk about all things real estate. Let me go over here and make sure that the Zoom is zooming. Right. That's number one. And then I'm going to share my screen, and I'll be right back. So, you have to be marketing, you have to be social media, you have to be it all. So let's see. I got all this set up properly, and now I want to share my screen. Oh, okay. God bless you guys. Thank you for grace. And then let me go over here to Canva. And, oh, I meant to set it up to share. Oh, and let me plug in my computer. Hold on. Okay. Because there will be nothing worse happening than if we hang up and get cut off on all this goodness. Okay, so let me go to presenter view. That's my goal. And let's do that. Oh, I don't want that. Okay, so, and let me get all the way back over to slide number 1. Sorry, y'all, I meant to do this before we got on here. Okay, so here we go. So I'm looking at my phone. I can see that the screen is sharing. And so we're going to go ahead and get started. So I'm going to be checking the chat for questions. So if you have questions, just let me know. I'm going to be answering them throughout everything. So who am I? I'm Garlinda Price, again, broker and owner of Fusion Properties LLC, from the capital to the coast, your realtor for life. And the reason I started doing these home buying, land, and investor summits and home selling summits, I forgot to put that on there, is because the market is shifting. The market is changing. So if you've been sitting on the sidelines saying, you know what, I'm going to wait to purchase a home, or I'm going to wait to sell my property, I'm going to wait until home prices come down, I'm going to wait until home values go up, and everything in between, what happens is missed opportunity, right? And so we know that because as professionals, and I'm trying to move this out of the way, we know that because as professionals in real estate, we know that you can't time the market, but we as professionals in the market can tell you when a shift is taking place. And what happens is some people listen to us, some people don't. Just like you have those people that will sell their homes or try to sell their homes themselves, or buyers that would try to purchase without presentation. Or, that's not what I'm looking for. That would try to purchase without representation, right? You don't want to be that person or those people, because real estate is tricky. Real estate is complex, and real estate has some nefarious people, honey. I've been using that word for about 2 weeks, right? It has some people that they do unscrupulous business transactions. And so you don't want to get caught out there not knowing what you don't know. So the Holy Spirit laid it on my heart to host these seminars. I'm going to do it every Monday as the Lord leads. If I miss a Monday, just know I'll make it up on a Tuesday or Wednesday. But my goal right now is to educate you, our community, our general public, on all things home buying, land, home buying and selling, and becoming an investor. So next Monday, you have to mark your calendars. I'm going to talk specifically to investors and beginning investors. And we're going to talk about, over the next several weeks, we're going to talk about investing in land specifically, investing in homes specifically, investing in vacation rentals, specifically Airbnbs. What is investing arbitrage? I'm going to teach on that. I'm going to teach on buying short-term rentals. That's where like you lease to like professionals visiting town, nurses on short-term contracts. And I'm going to teach on long-term. Okay. So those are all the things that I hope to teach you as the Lord leads going forward. So let's keep going. So on today's agenda, I don't have my trusty assistant with me, my business partner, Caleb. Tonight, he is working on some other things. And so it's just me tonight. You got to just, I know it's a little sad not to be here with Caleb, but guess what? You get me. So on today's agenda, we're going to be talking about homesteading. What is homesteading? What are homesteading exemptions? What is an assumable mortgage? And is it a pro or con, a good or bad? We're going to talk about that. What is owner financing? Is that a thing? Okay. New construction, how is it now to purchase new construction? What does that look like? What are land and home packages? Also, we're going to talk a little bit about investing leading into next week, okay? So, hey, shout out to Caleb Michael Price in case he sees this video later on. So about Fusion Properties. So the Lord called us into real estate in 2009 during the economic downturn so that we could be his key resource and a beacon of light in a dark time in housing history. And this is almost history repeating itself here in 2025. It is a dark time in real estate right now. I'm not going to lie. I just feel like there's so much going on that's not to the benefit of the buyer, not to the benefit of the seller, and really can be a detriment to some people. Even during COVID, when prices were elevated, now some people are starting to feel that burden. Okay. So we're a beacon of light in a dark time of housing history, and we're here to educate you. We're here to serve you. We're here to help you. And I always share with people that we don't have to do this for the money. Of course, we're going to get paid, but we get paid because of service. Service payment is a byproduct of service. So we're here to serve you well. Also, 17 years later, we're still here impacting and changing families. So I've been selling real estate for 17 years. I've owned a real estate firm for 15 years. And we're blessed to change the trajectories of families' economic statuses for generations to come. How so, preacher? Because the Lord shared with me years ago that we're not just selling houses, we are impacting generations. Because if your grandma owned a home, 9 times out of 10, she's going to talk to you about home ownership. If your mom and dad owned a home, 9 times out of 10, they're going to talk to you about home ownership. If no one in your family ever owned a home and you're the one breaking that generational curse or breaking into an opening, bursting forth those doors, you are an impactor, right? So you set the standard now going forward for your family. So all of us are impacting generations to follow us that will look up to us and watch what we do. And so we are not just selling homes, we're impacting generations of home and landowners, creating wealth one transaction at a time. And we want to know, are you our next success story? So excited to help you guys. And then what we believe, and then there's studies that prove this, but owning a home is the keystone of wealth. There are 3 ways to become wealthy in our society: real estate ownership, finance and investments, which is investing in the stock market, and entrepreneurship. That now you also, and finance and investments includes insurance, right? So you can become wealthy through real estate ownership, the stock market and insurance, and entrepreneurship. Those are the ways to wealth. Okay. So welcome to your wealth journey. Our mission is what we aim to achieve. Fusion Properties LLC empowers everyday people to become real estate investors and owners through education, access, and action, paving the way to financial freedom and generational success. We are honored to do so. And in our different services, real estate purchasing, we serve our home buyers, whether you are a move up buyer, a first time home buyer, you own multiple homes. We are here to negotiate on your behalf with skill and diligence to get you into your new home. If you are a real estate seller, we offer listing and selling services, and we serve our sellers with excellence in getting them from point A to point B for top dollar as quickly as possible. And if you are a real estate investor, we offer an amazing training course with our Kingdom Real Estate one-on-one investing course. It's self-paced. It's $297. You can break it up into 10 payments, which is $29.70 a month. And you can set it up on different payment plans like Klarna and things like that, Affirm. So I'm going to do my best to remember to share the link in the comment section before we get off of here, hopefully if I don't forget, but we offer a self-paced coaching program where you can learn how to become a first-time beginner real estate investor. DM us or ask us for more details. I'm also going to share my contact information in the chat right quick. So give me a second. I'm going to pop my Blick link in there. Hold your horses. Give me 1 second. Copy link. Got it. Here you go. That's my contact, my digital business card. And I'm also going to put in here my Calendly link if you want to schedule an appointment with me. So hold on, let me do that right quick as well. See, if I had Caleb, he could do all this for me. So then also you have my Calendly link. And then the next thing I'm going to share with you is if you are a buyer, we have a buyer consultation form that you can fill out. You also, if you are a seller, you can fill out the seller consultation form. So let me grab this as well. And then that way you have access to me, okay? All right, last one. Okay, so let's get started. You have in the chat all the ways to reach me. Oh, and my phone number, just in case you don't want to open all those up, or the chat gives you a challenge. There we go, 910-494-7798. Okay, so who am I? I'm Garlinda Price. I already shared that with you. I'm a realtor, a broker, and an owner. There's a difference between a real estate agent, a real estate broker, and a real estate owner. And a realtor, right? So a real estate agent is someone that's not a broker. So in North Carolina, everyone's a broker, right? So we get the broker deals from the day we get our license going forward. You have to work with someone for 2 or 3 years, I believe. And then you can go off on your own and you can work as a full-time broker. You got to complete 90 hours of continuing education. A realtor is a designation. It's actually a membership. So a realtor is a high status of where you're actually a part of the National Association of Realtors. You're governed by rules and a body of ethics that you have to follow. And so it's one step above just people that are regular agents and not a part of a realtor status. We get access to the multiple listing service. We get access to training that other people don't have access to. And so for 17 years, I've been a realtor. For 19 years, I've been a real estate investor. And just to share with you why I'm qualified to teach what I'm teaching tonight, I'm a certified international property specialist. I'm a certified short sale and foreclosure expert. I'm a land professional. I've sold subdivisions, raw land, lots of land, parcels of land in different areas. Also, I used to work specifically for land investors that develop communities out in Harnett County, as well as over in Spring Lake and here in Fayetteville as well. So I have expert knowledge in land and land purchasing. I'm a certified investor associate, and I'm a certified resort and second home property specialist. The areas that we serve, the entire state of North Carolina, as well as the globe. And why do I say that? Because I just shared with you, I'm a certified international property specialist, but we refer our clients all across the United States. We just had clients that we sold their home here. We referred them to an agent in South Carolina. They purchased a home there. I had a client I sold a home for here. They moved to Alabama. I referred them to an agent there. I had a client I sold their home here, referred them to an agent in Virginia. So you get the point. We refer across the country and across the globe. We have referred business as far as Mexico and Germany. Okay. So we can work across the globe and around the globe for you, but we can directly work with you here personally in the state of North Carolina. Okay. So what are the first steps in the buying process? I'm just going to go through this really quickly because we covered this last week. So the top home here, I was blessed to sell to some clients of mine. This is my second time selling them a home. This is their move up home. And the first steps are don't be scared. Find out where you are. We have you speak to a trusted lender so that you know where you are credit wise. You know what your next steps are buying wise. And this is the first step that a lot of people are afraid of, is talking to the lender. You don't want to go off of online credit sources to determine where you are with purchasing a home, because what a lender looks at and what's online sometimes are two different things, apples and oranges. So go through us. We can connect you with our trusted lenders. We work with we work with first-time home buying lenders. We work with investor lenders. We work with hard money lenders. We work with nonprofit lenders. We work with city and county organizations that loan money. you name it. If whatever it is you're looking to purchase, we can help you. If you're someone that, let's say you're a doctor, they literally have physician loans, right? That take into account student loans and their medical loans and all those things for medical school. So we can help you get where you're going. If you want to focus on vacation properties, we can help you with vacation rental loans or vacation property purchase loans. You get the picture. And then do the work to get there. So if you need to do some work, we have credit repair specialists that we can connect you with. Also, if you're looking to purchase a property, you want to make your payments on time, and then don't make any new debt. No car pay, no new cars, no new debt, no new credit cards. You don't need anything. None of us needs anything. I'm not telling you what to do, but I'm saying if you're interested in purchasing a home, don't establish anything new unless the lender says, hey, you need to establish some new credit. Let the pros tell you that, okay? And then do not be a co-signer on a loan for anyone, because the worst thing that you can do is co-sign on a loan for a family member or a friend. They stop paying on it. Now you're either responsible for it and it throws your debt to income ratio out of whack, or they stop paying and then it throws your credit off. And now all of a sudden your credit is plummeted because somebody stopped making a payment on a loan. Okay, so don't co-sign for any loans. What can we do for you? We help you visualize your dreams. Home ownership is not out of the realm of possibility for you or anyone else. However, you have to take the necessary steps to be credit ready starting from a 620 and up. Now, there are programs out there. Someone just emailed me earlier today and told me that they have loan programs for people with a 580 or higher. I would just tell you that with a 580, between a 580 and a 620, you don't get the best interest rates, but you can get into a home. Okay. So wherever you find yourself, again, reach out to me. We can help you visualize the dream of home ownership. How much can you afford? This is based on your debt to income ratio and determined by your lender. Credit Karma versus a lender pool, I just shared, is two different things. What debt should you pay off first? What if you don't have any credit? Do you need money to borrow? We will talk to you about all those things. And we talked about it last week, so I don't want to belabor the point, but you do need money to purchase a property. But how much depends on what loan type you use. So anywhere from 1.5% to 6% is what you need down, okay? And that's 1.5% to 6% of the purchase price of the home, what it's selling for. And then we can help you find your dream home. No pre-approval, no home shopping. And what do we mean by that? If you don't have a pre-approval letter, my team and I will not take you out to look at a home, because we want to serve you at the highest level. And how can we do that? We help you figure out what your bargaining position is, AKA your purchase range, and then we go shopping, right? You don't go, because we don't want to take you window shopping. We want to take you home shopping, right? So there's a huge difference. And then what is a pre-qualification versus a pre-approval? A pre-qualification means the lender has not seen any of your documentation. You call the lender and you said, hey girl, hey guy, hey girl, and you said, I want to get pre-approved for a home loan. And they're going to ask you, how much money do you make? Oh, I make $300,000 a year. Oh, okay, you qualify for $500,000. They're going to send you over a pre-qual letter. It's not worth the paper it's written on, technically, to some sellers and to us as professionals, right? Because we want you to have a pre-approval, because we want you to have, when you find a home, because competition is getting ready to get stringent and tight. That's why I'm teaching this now, so you can get ahead of the curve before all that competition starts again, okay? So when you have a pre-approval, they have looked at your W-2s, they have looked at your tax returns, they have looked at your documentation, they've looked at your pay stubs, your bonuses, whatever it is. They've looked at it and said, okay, I feel good about giving Garlinda a pre-approval. Here's her letter and the range in which she can search in. Okay. So that means that when you find a home and you're ready to go, you don't then run and go talk to the lender to try to get pre-approved. You're like, oh, I got my letter. So that's how a lot of people during COVID, when interest rates were decent and the homes were like selling like hotcakes and they had all these multiple 20 and 30 and 40 offers, those people that were able to go ahead of everyone else had a pre-approval. Other people that were able to go ahead of everyone else had proof of funds, right? If they were paying cash. And so our job and our goal is to put you in the highest competitive position if you're a buyer, and to put you in the highest competitive position if you're a seller, right? That's our job. And then which one carries more weight with the seller? The pre-approval, right? And then we provide you with the best fit. We do FHA, not us as the lender, but we help you borrow money for FHA loans, VA loans, USDA, conventional, down payment assistance loans, 203K, which are renovation loans. Can you qualify on your own, or do you need a cosigner? It's going to depend, but you can have a cosigner if someone else has stronger credit than you. It just depends on, every scenario is different. And then you're not married, should you buy together? That's going to determine and be based on the strength of your relationship. Okay. So we won't tell you what to do, but we will tell you that North Carolina is a community property state. So if I purchase a home with Marvin, and Marvin and I aren't, shout out to my lamb chop, AKA Lammy for short. Let's say that I purchase a home with Marvin and Marvin and I are not married. We purchased our first home together in Virginia. We were not married. We were boyfriend and girlfriend. And that meant that we owned that home together. Virginia was a commonwealth. And so if I wanted to sell, I needed Marvin. If Marvin wanted to sell, he needed me. So North Carolina is a community property state. It takes one to buy, meaning I can buy it by myself, but it takes two to sell. So when I get ready to sell, guess what? I can't ditch Marvin and be like, Marvin, sorry, babe, I sold the house out from underneath you. You can't do that, right? Because it takes one to buy and two to sell. So you want to make sure, if you're going to purchase a home with someone that you're not married to, that you all have something in writing, an agreement in writing of some sort, because you won't be able to unload that property without each other's signatures. Okay. So what is a homestead? This is what we didn't get to talk about last week. And we all have started to hear this term for the last, 5 years, maybe longer. A homestead, probably longer than that, probably maybe the last 5 to 7 years. But a homestead typically refers to a permanent freestanding house, a condo, or a manufactured home that the owner occupies as their principal residence. Although this is a broad definition, the exact definition of a homestead depends on the state. So most of the time when we think homesteading, we think farm, we think land, we think growing vegetables, we think having animals, we think having multi-generational family and living, and it can be all those things. So really a homestead is defined as whatever you term it as. I listened to a video earlier, and the lady had asked the guy to describe his definition of homesteading. And his definition of homesteading was like to be able to live off the land, reduce his home costs, reduce his grocery bill. And he said he hadn't yet figured out how to reduce his grocery bill, but probably because he owned animals, right? Because it costs to take care of animals. So a homestead is wherever you live, but also this is what the state says. State homestead laws allow homeowners to register part of their property as a homestead, which can offer property owners certain legal protections. Some state homestead laws can also mandate a maximum amount of property that can be claimed, as well as the type of property. So I thought that was really interesting. So look, homesteading has exemptions, certain exemptions that can help lower and reduce taxes when you claim homesteading, right? And so you want to talk to an accountant, you want to talk to a lawyer, you want to talk to a professional, you want to call the state and find out about the homestead exemptions for your state. I'm not a homesteading expert, throwing that out there now. I'm just sharing with you what homesteading is, because there's a lot of conversation around it, especially when you go to buy land and put your house on a land or build on land. You want to understand what you have the rights to do and what you can do, and where you can possibly save money based on these exemptions. So a homestead exemption is designed to lower the taxable value of a homeowner's primary residence, which in turn reduces the property tax burden. This exemption can vary significantly from state to state, but its primary purpose is to make home ownership more affordable and to protect homeowners from losing their homes due to financial difficulties or creditor claims. So we used to hear a lot about homestead exemptions when you hear about farmland and people owning farms and 100-year-old properties that people have had in their families for generations and generations, right? So a homestead exemption is a legal provision that shields a home from some creditors following the death of a homeowner's spouse or the declaration of bankruptcy, and minimizes property taxes for homeowners. Lord, I need to write myself a note. Sorry. I forgot to follow up with someone when I was saying farm and something else about taxes. Okay. So it can, from some creditors following the death of a homeowner's spouse or the declaration of bankruptcy, and minimizes property taxes for homeowners. Homesteading does not protect from money owed to the lender to prevent foreclosure, taxes, nor creditors. There are some exceptions. So that's why I say you want to talk to someone in your state or your accountant or an attorney or your mortgage company. You want to find out what homesteading exemptions you may qualify for if you own a home. Okay, so moving on, we're going to talk about this is the current mortgage rate today. That this was last week, so I didn't update this slide. The current mortgage rate last week when I checked it was 6.3% for refinance. Today I checked was around 6.8%, and the average home price is anywhere from 230,000 to 248,000. So that prompted me to want to talk about what is rent to own and owner financing, because when with everything being so expensive in terms of home prices and home values, because home pricing is expensive because home values are high, which is a blessing, right? Not the expensive part, but the value part, right? And then in some parts of the country it's just completely outrageous, right? What home values are priced at, where there's usury, meaning they're priced so high and unaffordable that it just doesn't make sense, right? And so whenever you look at the interest rates and whenever you look at the average home price, some people may say, well, they feel like they're never going to own a home. But there are so many options out there that you may not know about or that you're interested in that now are making a comeback. So rent to own and owner financing is having her day. Honey, that he is having his day. So now is the time to think about, if you've been on the sidelines, now is the time to start looking at homes, especially those that have been sitting on the market longer. Reach out to your favorite professional, which is who? Yes, me. Fusion Properties LLC, Garlinda Price, your favorite realtor, your realtor for life. You want to reach out to me. We can hunt down rent to own and owner financing transactions. Now, will every seller want to do this? No, because there's some downsides to it. But rent to own or owner financing is where an agreement is made between you and the seller of the real estate for you to make a down payment and agree on monthly terms, and you begin the process of owning the home. So, in other words, that seller is the bank, right? The seller or the owner becomes the bank versus you doing traditional mortgage lending versus you being a traditional buyer. The owner is the bank. What does that mean? So you normally have to put down a sizable down payment. So this isn't one of those no money down programs. Whenever you've decided that you want to rent to own or you want to own or finance, you're going to need some money, right? You're going to have to put down a sizable down payment and agree on monthly terms in exchange for ownership rights. What does that mean? That means that you step into the position now of an owner. You then become responsible for your monthly payment, which is not a rent payment. It's like a mortgage payment because you're owner financing. You're responsible for maintenance. You got to cut the grass. If the air conditioning breaks, a hole in the roof, there's a leak in the faucet, you are responsible for fixing all those things. Why? Because now you are renting to own. You are owner financing. You step in as the owner, and you are responsible for the upkeep and all things related to home ownership. There are many sellers starting to do this now across the country, and investors that are flipping just to rent. There are builders that are building just to rent. So now is an opportunity for you to step into the rent to own and owner financing space if that's something you've been thinking about doing. And this is really great for someone that either doesn't have great credit or has questionable credit or has no credit, or maybe in the past you had a foreclosure, but you have a sizable down payment. You're like, you know what? I make great money. I pay way too much for rent. I'm ready to own. I'm ready to see if I can find a home where there's a seller that will consider renting to own to me, and they will let me make their mortgage payment and let me buy their home. Okay. So this isn't the type of scenario that you want to go into if you're not sure this is going to be your forever home, because the down payment that you put down is non-refundable. You won't get it back. Okay. So there's some pros and cons. So how does rent to own differ from traditional home buying? Well, I'm glad you asked. It's going to require a larger down payment. It's non-refundable upfront money that you pay, and the amount that you have to put down can vary anywhere from 5% to 25%. It's considered a lease until all mortgage payments are paid. So if you default, you can be evicted. So the seller does not have to foreclose on the property unless you're there. Every state's different. Let's say you're there over 3 to 5 years, whatever the state rules are. I'm just using that as an example. Then they don't evict, they foreclose. So then instead of having eviction or judgment on your credit, you would have a foreclosure, right? So that's why you don't want to walk into a rent to own or an owner financing scenario willy-nilly, because some people are like, hey, this is what you agreed to. This is what we talked about. Your down payment's non-refundable, and they could evict you or foreclose on you if you don't make your payments. Okay. But this is a great option for someone with no credit or bad credit, yet has a consistent, steady income and a great rental history. So you have to have a good rental history, because no one's going to want to own or finance to you knowing that you're doing a lease option to purchase and you didn't pay the last landlord. Okay. So starting today, if you haven't paid on time, you want to start paying on time and be that person that says, you know what? I'm going to make my mortgage payments on time because I want to be able to purchase a home and or own a home, and I want to be able to stay in the home, right? So let me just make sure I share this. I forgot a second ago. Okay, perfect. So this is also with this purchase type with rent to own and own, I'm sorry, rent to own and owner financing, you're technically the homeowner, again, like I said, responsible for all maintenance and repairs. In some cases, you also are responsible for paying the taxes and the property insurance. And so most owners that are seller financing are not going to owner finance and seller finance to someone that doesn't have insurance. So that's why I say you have to have money, right? Because you're insuring not only your belongings in the home, you're insuring the whole house, right? And then you receive the deed on the home once you have made all the payments to pay the home off, which can be done early. So with a rent to own or owner financing, it depends on the terms that you and the seller agree to. So some sellers have a 30-year mortgage. So you can rent to own or owner finance for 30 years. You could do 15 years. You could do 20 years. It's whatever you and the seller agree to. Okay. And how fast you feel like you can pay the house off. Now, what's really great about seller financing and owner financing is they don't do credit checks. They do rental checks. So that's why I said it's super important for you to make your rent payments on time, because if you can find this incredible opportunity, which they really not right now, we start to see a lot of these come on the market. So if you can take advantage of this, you need to have had a great rental history for the last 2 years. Okay. They're also hard to locate. However, they are becoming more popular, and especially with investor owners. You will want to make sure as the buyer that this home that you're going to own or finance or lease to own is where you want to stay, because as the investment up front is expensive and it's non-refundable. Again, remember I said you have to put down anywhere from 5% to 25% down. So if you don't stay there, you don't get that money back. Even if you do stay there, you don't get the money back, right? You get a credit towards the principal of the mortgage, but you don't get refunded any money. Okay. So if you walk away, no money back. If you go forward, you purchase the property, it's the end of 15, 20, or 30 years, whatever you all agreed on. That amount you put down, that 5% to 25%, whatever it subtracts from the amount of the property. So for example, you buy a $200,000 home, and let's say you put down $20,000. Did I say 200? Yeah. So you put down this, you're buying the home for 200,000, you put down $20,000, you only owe $180,000 when it's time to purchase the property. Okay. And then this is a great option for would-be investors as well, but I'm gonna talk to y'all at the end. This type of investment is called a slow flip, right? So I'm gonna teach on that next week. And then assumable mortgages. So we talked about rent to own. We talked about lease option to purchase and owner financing. But what is an assumable mortgage? These are becoming extremely popular right now. Now, before, back in the day, when interest rates were 2.5%, 3%, 4%, even around 5%, we were like, hey, you don't want to let anybody assume your mortgage. Like those mortgage rates were amazing. Now these mortgage rates are a little disrespectful. They've gotten better now at 6.3 and 6.8. But earlier this year, I'm sorry, when they were at 7, 8, and 9%, this is when people started letting people assume their mortgages. So what is an assumable mortgage? What is it? And do I want one? Okay. So an assumable mortgage lets you take over the seller's current loan with the same terms and interest rate. So let's say that I was able to find a seller that has a 3% interest rate. And they're like, you know what? I just want to be done with this property. I'm willing to let you assume my mortgage. I want to go to Costa Rica. I don't want to deal with this home anymore. Garlinda, you step in and assume my mortgage. So that means that, see these two people up here? There's a person right there. So that means that I get to take my money, assume this seller's mortgage, and this seller lets me assume their mortgage, and I step into their position. I become them on the loan document in terms of loan land. I'm now taking over the same terms. I'm taking over that 3% interest rate. If they have 15 years left on the mortgage, that's what I'm taking over. FHA, VA, and USDA loans are usually assumable. So if we have a seller on the market, when you reach out to your favorite real estate agent, your realtor for life from the capital to the coast, your realtor for life, me, when you call me at 910-494-7798, then what we're going to do, we're going to look and see if there are any FHA, VA, and USDA loan assumptions available at those lower interest rates, but in the area you want to be in, if there's a house you want to be in, we'll see, hey, is the seller willing to do an assumption? So conventional loans typically are not assumable. Those are like your investor loans. Those are people that put down the 5% to 25%. Those are people that generally have really high credit scores. Those loan types are not assumable. Okay, so only FHA, VA, and USDA. Assumable mortgages can save you money when current interest rates are higher than the existing loan rates, i.e. now. Right. So if you could find someone that has a 2.75, those are normally veterans, or a 3%, 3.5%, a 4%, a 5%, those would be people that bought back in 2009, 2010, 2011, 2012, 2013, like all the way up until COVID, right? You can find better interest rates. Maybe not before, maybe not shortly before COVID, but a year before COVID, right? So 2009, so maybe people that purchased 7 years ago, you're going to find some really great interest rates. And so maybe these people would consider an assumption on their mortgage or an assumable mortgage. Here's the pros and cons. Lower interest rates. You lock in the seller's older, potentially lower rate as rates rise, like we just talked about. Your closing costs are capped on the FHA, VA, and USDA. The loans limit closing costs on assumptions, often without needing a new appraisal. That alone is going to save you $800. When I had to pay for an appraisal, it was $850. I was like, good gracious. And I say that because appraisals used to be $450 to $500. Then they went to $650. Now they're like $750 to $850, right? So this will, you can assume most of the time without needing a new appraisal. That's a blessing. And then you have long-term savings because you're borrowing less money over a shorter period of time, saving money on interest compared to a new mortgage. The cons, you do have higher down payments. You might need a larger upfront payment than with a new loan. Mortgage insurance, FHA and USDA loans come with ongoing mortgage insurance premiums. VA loans do not. So if you can find a VA assumable loan, that's good. And then there's limited loan types. Conventional loans usually aren't assumable. So if you qualify for one, it may be a better choice than assuming a government-backed loan. So those are your pros and cons. And then assumable mortgages, what is it and do I want one? Mortgage assumption can take place in two ways. And I don't want to belabor the point on these explanations, but I just wanted to make note of how you can do it. One way is by a simple assumption. In a simple assumption transaction, the purchaser would take over the mortgage contract and continue to make payments on the loan. However, the seller is still on the hook. If for some reason the purchaser defaults, the only difference is that the seller now will be in a secondary position to pay off the loan. In other words, even though the purchaser is paying, the seller can still be held liable for the mortgage if the purchaser fails to complete the payment. So that's why some people don't like assumable loans. And that's why back in the day, we'd be like, don't let anybody assume your loan, because technically the person that's assuming it is responsible and is in the first position. But if they stop paying, the seller that gave you the assumption is in the second position, and the bank is going to be like, John Doe, we want our money. Girl, Linda and them, they didn't keep doing the assumption, and now we need you to pay. So I shouldn't use myself as an example. I hate that, right? But anyway, secondly, by novation. In contrast, innovation is when a purchaser agrees to take responsibility for both the payments and the terms of the mortgage loan. In this scenario, a lender will assign the seller's rights and duties to the new purchaser. A new mortgage contract will then be created that releases the seller from all mortgage loan obligations. So that's normally the best one to do, because now if you're the seller, because you get off the hook, right now you're not on here responsible if John Doe stops paying or Jane Doe gets upset and they're like, hey, we're done, we're not paying this anymore. And now you got to go back to making this mortgage payment when you thought all was well and good. Okay. So novation is the best route with that. It is important to note that not all mortgages are assumable. Additionally, regardless of which type is chosen, a lender will still need to formally approve the mortgage loan assumption. So you still got to go through the approval process. Whether a lender approves this transaction will largely depend on the purchaser's ability to pay off the remaining debt, as well as their potential to qualify for the loan. So assumable mortgages are really great, and they can give you a great interest rate, and you can get potentially better terms, owe less money than you would if you did traditional financing. So that's why it's important to get your credit up where it needs to be, have you some money to put down if you want to take advantage of the best deals that are out there. Okay. This is a really great, assumable mortgages are a really great option for investors. Okay. So as I'm teaching this, I'm talking to you investors as well. So lease to own, lease option to purchase, rent to own, assumable mortgages. These are key ways that you can become a real estate investor. Okay. Not just if you're a buyer and you're looking for creative ways to purchase property. Okay. And then short sales and foreclosures. So back in my heyday, I was a short sale queen, short sale maven. And that's not me bragging, that honey. Listen, my first short sale went to foreclosure. I vowed to never do another short sale. And then one day out the blue, this guy called me and said, hey, I'm a short sale negotiator. I have an investor client and we need an agent. I still to this day don't know how he found me. He said, we need an agent. And I said, well, I don't know how to do short sales. I'll be honest, the first short sale I had went to foreclosure. And even though I had the designation at that time, I had just taken it as a CE course. But I had learned so much during the course, but I was like, Lord, obviously I'm not cut out for this because the first one went to foreclosure. And what I found out later on, which made me feel better about it, the guy was already 6 months behind when I took the listing. He hadn't been honest, right? So the house went to foreclosure. So the short sale negotiator said, I'll teach you everything you need to know. We just need an agent. We need a listing agent. And would you do it? So I said, well, yeah. I felt like the Holy Spirit was literally leading me down that path. And it ended up being the best decision I could have ever made at that time in my career and going forward, because out of 1,600 agents, nobody wanted to do short sales. I was one of 3 people that did short sales, and I was the only person that did it full time during that time. And so I began to take more classes, more training, to gain more expertise. And so I've successfully helped 75 to 100 people. I lost count, save their credit. They didn't get to keep the home, but they were saved from a foreclosure, and walking them through the process of gracefully exiting a home is because it's like losing a family member. Like a lot of people mourn their homes. And so the Lord really blessed me to serve so many families during the short sale, and some that went the foreclosure process because there was just no way around it, right? Or they took a deed in lieu of foreclosure. I teach all about that in the investor course, okay? So what is a short sale? A short sale is where you ask the seller, where the seller asks the lender to allow them to sell short of what they owe them on their mortgage or what they owe the bank. Let's give an example. Let's say that the seller borrowed $400,000, and then all of a sudden the market tanks, like the market crashed. They're not calling it a market crash, but you guys, the market crashed, right? In the real estate market anyway. So he goes to sell his property. He gets called away. He's having to relocate, but he paid $400,000 for this house, but his neighbors are dump selling their houses. And now the house is only worth $350,000. And he's like, what the crap? What am I going to do? Right? So he contacts the bank, and the bank is like, okay, well, you could do a short sale. So that's when you do what? You call your favorite short sale expert, your real estate pro, Garlinda Price, Fusion Properties, your realtor for life, and we walk you through the short sale process. So it's become so super simple now. Back in the day when I tell you it was hard, it was like that piece of candy at the bottom of your grandma's purse with the hair and everything else stuck to it, but you just, suffer through picking all that stuff out because you're in church and you want candy. That's a short sale. Right? But they've gotten progressively easier and systematic, where before we literally were blazing a trail through the jungle. So you reach out to them and they say, okay, you can consider a short sale. Well, in order to qualify for a short sale, you have to have a hardship. You have to have a pending hardship. you're in a hardship, or you are projecting or foreseeing a hardship, death of a loved one, loss of the income of the breadwinner, relocation for your job. There's about 13 to 16 reasons that can justify a short sale. Okay. And it's a long process. So if you're someone that says, I want to buy short sales or I want to buy a foreclosure, you got to have a hurry up and wait mindset because it's not a quick process, but a short sale stops the foreclosure process. Okay. So it is really great for sellers that are upside down or, are not able to make their payments anymore because they bought at the height of the market during COVID. And now they're like, oh my gosh, what are we going to do? A short sale is an option for you and it stays the foreclosure process. Can you buy a short sale? Yes, you can. However, be ready to be patient and to wait. And not only that, the price that you see for a short sale is not etched in stone. The ultimate decision maker for the price of the purchase of the property is the lender, it's the asset manager. So you could go under contract for $200,000 for a short sale. They're going to order an appraisal. The short sale appraisal alone is going to take 45 days, and they may come back and say 250. So now you waited 45 days only to find out you're purchasing what you thought was a $200,000 home for $250,000. So you got to have an expert and a pro on your side to help you manage your emotions and manage these process and navigate this stuff because it's important. There's a lot of moving parts in short sales and foreclosures. So whenever you go to purchase a short sale or sell via a short sale, the bank wants to make back at least initially 88% of the money they loaned out. Of course, 90% if possible, but 88%. And then the longer the short sale sits on the market, they're willing to take maybe 84%, a little bit less. So short sales are not steals, like you getting ready to steal from the bank. Don't listen to the gurus if that's what they're saying because it's not true. The bank wants to make their money back, right? They lent the money, they want their money back. And then what is a foreclosure? So a foreclosure is where the seller has defaulted on the loan. Can you buy a foreclosure? Yes. However, there are parameters. Again, you need to be patient. So a lot of times people will tell me, I want to buy this property. I want to buy. Hurry, send me the contract on this property. And I'll go looking for the property all over heaven and creation. And I can't find it, right? Because it's a pre-foreclosure. So pre-foreclosures or what we call shadow inventory. That means that home has the foreclosure process has begun, but it has not gone all the way through the foreclosure process. So pre-foreclosures, you cannot purchase unless you have direct contact with the asset manager, which most people don't. Okay. And not only that, it's the most dangerous time to purchase a property because it still can have all of its liens and everything else attached to it. When it forecloses, all the liens fall off and then you can buy it. So if you're going to use an FHA, VA, or USDA loan type, and you want to buy a foreclosure, you can, but it has to be move-in ready. It can't be holes in the roof, look like Freddie and Jason been living in there, all the plumbing torn out, the electrical shot, the HVAC missing. You can't. Now, the HVAC could be missing if the seller, the bank, the REO, or the VA, whoever has it foreclosed, is willing to replace it. I've done that before. So yes, you can buy a foreclosure, but there are parameters. Okay. But during COVID, literally there were 0 foreclosures because people have so much equity in their home that it wasn't going to foreclosure. And even now there's fewer foreclosures, but there's more foreclosures. We're starting to see them every week where before we didn't see them at all. Right. So you can. Okay. And then custom build and new construction. Oh my gosh. So shout out to my clients today that went under contract on their new construction home, but you have to know to build or not to build. That is the question. So during COVID, we all know it. Lumber costs, building material costs, everything went up. Supply and demand shot through the roof because there was a limited supply and a higher demand. Everything skyrocketed in terms of pricing. And it has not gotten any better because we haven't caught up because then they added tariffs. And so now that the tariffs got added to the wood costs and the building materials and the shipping costs, everything's gone up in price. So tariffs affect all costs, right? Material costs were already high. And so builder deposits, when you go to build a new home, you need to know that you're going to have to put down 1% normally or a little bit higher of the purchase price to start and to start the process of your pre-sale, your new build, whatever it is, 1% down. So let's say you're buying a $500,000 home, $5,000. You're buying $1 million home. I can't even add $100,000. So you're going to have to put money up front and you're going to have to put money down in order to start your custom build and or your new construction, depending on the builder that you're building with. But what I will share also is that you're going to get also smaller homes for more money. So now if you're buying a new construction home, the square foot range is a little smaller for more money than it was before. Prices have increased, and what you're buying now is about $100,000 more than what it would cost 4 years ago. That's why it doesn't pay to wait and sit on the sidelines, because the cost isn't going to go down, right? But your ability to purchase, you don't want that to be so far away from you that you can't catch up to it because you're waiting on the sidelines. Now is the time. I'm telling you, now's the time to get ahead of the curve before everybody starts to say, you know what, I think I'm gonna buy a home, because I'm telling you, the market has picked up. And now I'm starting to see it go faster than it was before, because people's mindset have adjusted that, okay, the new foreclosure price is now 140. I'm sorry, not foreclosure. The new investment property price to start with for something moving ready and good to go is around $140,000 to $160,000. Why? Because also the resale value is there, because now those some homes can sell anywhere from $215,000 to $229,000 to $249,000, right? So even though it's not the $80,000 homes that you saw back in 2009, the $80,000 home is now the $160,000 home. So it's not going to change. But what can change is your mindset to say, as long as the numbers work and I can make the money, I can do it, right? And then, do you own land? Land home packages are tricky if you don't know or read the fine print. So like there are some builders out here like Red Door, that's all they do is land home. I shouldn't say that's all they do, but they specialize in land home packages. So if you own the land, you deed the land over to the builder, then the builder wraps the cost of the land into the home purchase. You pick out your floor plans. They have floor plans to choose from, but you're responsible for site location, meaning if you don't have the land, you got to go buy the land. So you got to have some cash, right? With the land home package, you got to have some cash. You go buy your land, you deed the land to the builder, and then they start the process. But you're also responsible for the surveys. You're responsible for your soil testing. You're responsible for the well test or the water test. You're responsible for the grading of the property, the clearing of the land. So you got to know all the details when it's time to go do the land home package, rather than I'm just going to go buy this lot and stick my double wide up here. I'm going to go buy this lot and build my modular home. I'm going to go buy this lot and build my dream home. You got to know that there's some upfront costs involved, and you want to know who's going to pay for it. Is it you or is it the builder? Okay. So you will need some money up front. That's why you see money right there. Okay. And then we're wrapping up, but I want to be a real estate investor. Where do I start? Well, first you start with my class, right? Because it is a Kingdom 101 real estate investing course. It's $297. You can pay it up front. You can pay it in 4 increments, or you can pay it over 10 payments, $29.70 a month. You have a year to take the course. It is perfect for beginner real estate investors. I cannot stress that enough. It teaches you everything, apples to oranges, alpha to omega, beginning and the end. Okay, I'm just saying that jokingly, Lord forgive me. A to Z on what you need to know to be a real estate investor. Okay, so once you decide where should I start, you got to decide on your strategy first. I'm getting ready to teach you the different strategies. So begin where you are with what you have. If you don't have a lot of money, it's okay. There are ways you can start with little to no money down. I don't want to say no money, because people say that and it's not true, because you got to have some business cards. You got to have a phone. Sometimes you need to mail stuff. So you got to have money for postage. So it's not no money, but you can start with less money. Okay. And then stay close to home initially. When you're going to invest in a property, keep it in your town or close enough where you can drive to it, because you're going to be going there every day. You're going to be going there every week. You're going to be going there every weekend. And so you're going to get tired of going there when it's too far from where you live or too far outside your footprint. So like the flip that Marvin and I have on the market right now isn't done. So we live in Eastover. So I can take a straight shot down 301 and be at that house in 25 minutes. 30 if I'm driving slow, and I do drive slow, right? I drive like somebody's grandma. So you want to buy a property that's close to where you live or close to where you work, so it doesn't become burdensome. A lot of investors will say, "Oh, I own in Ohio and they're in Florida, or I own in Detroit and they're in Michigan, not that is in Michigan, or they're in Virginia, or they own in New Mexico and they're over in DC," right? So those people probably have experience. Until you get experience, you want to look on just get a big map, and they do still have those at the Department of Tourism, I think downtown in your area, wherever you live. Get you a map of your city, and then you want to look at all the different zip codes. And based on the zip codes and your strategy, you want to say, okay, this is the circumference and the radius of where I want to stay. So Marvin and I decided we don't want to be landlords. I don't like being a landlord, right? So I'm not going to do that. I love purchasing and investing in mobile homes, but I don't like mobile homes in parks. So we're not going to buy a mobile home in a park again, right? We sold our last one last Christmas. Hallelujah. Thank you, Jesus, and made great profit on it. But I don't want to be in a park because I can't control the lot rents, right? So you got to figure out, what do you like? What don't you like? We like fix and flips, right? And then we also like a couple of the strategies I want to talk to you about on here. So let's talk about wholesaling. So wholesaling is where you find the deal and you're the middleman. Okay. So let's say that your neighbor, the house has been vacant for the longest time, but you know that your neighbors that used to live there, they passed away, and their kids come back every now and again to take care of the house. They don't live in the state. They live out of town or in another county over, and the house is getting vandalized or it's running down, and you're outside talking to them, and they're like, I'm really tired of taking care of this property. I need to figure out what we're going to do. And then you ask them, hey, would you like me to connect you with a real estate investor? And they say yes. Then what you can do is say, okay, I'm going to connect you with a real estate investor. How much do you want to sell it for? And let's say they tell you they want to sell the property for $100,000. Hold on one second. Okay, so let's say that they want to sell the house for $100,000, right? But you know that that area is worth about $150,000 to $200,000. Okay. But they just want to get rid of it. So if you're not versed in negotiating, you can just say, you know what? I'm willing to help you get it sold for $100,000. You don't want to be one of those wholesalers that lies, right? And I won't go into detail about that, but you want to be honest from the jump that you're going to help them sell the property. I'm sorry, you're going to help them sell the property without using a realtor, right? They don't need a realtor to wholesale the deal. You're going to put it under contract, and you're going to market it to your investors. You're going to market it to the general public, and you're going to help them get it sold. They're going to say, okay, you're their new best friend. So you're going to say, okay, I'm going to write an offer to purchase contract to you for $100,000, and you're going to set a timeline to close. So they say, yay, they're all excited, just like the little money thing down here. Now you have a contract. You have an offer to purchase contract between you and that seller for $100,000. Now you got to go find a buyer, right? So there's tons of people you could call realtors and say, hey, I have this wholesale deal, $100,000. Here's the address. The realtor goes to look at it and or sends it to their client. They have an investor. And now the realtor says, okay, I have an investor that's interested in your wholesale deal. You can do two things, right? You can assign the wholesale contract, the $100,000, to the investor. Let's say the investor says, hey, I'll take it for $150,000. So now you assign your contract with the seller to the investor. You offered the seller $100,000. The investor offered you $150,000. You go do a same day close. That's called a simultaneous closing. And now when they go to the closing table, your name is on the HUD. The seller's name is on the HUD or the closing disclosure. The seller's name is on there, the investor's name is on there, and your name is on there. How much did you make for wholesaling the deal? Meaning connecting the seller with the investor through the realtor. You made $50,000. Remember, because you put it under contract for $100,000. The investor said, I'll do it for $150,000. And then you netted $50,000 there in between. It didn't cost you anything but time, right? So that's what wholesaling is. Subject to is a little more tricky, and you have to be careful with subject to transactions because every mortgage, every deed has every well, not deed, every mortgage and every note has a due on sale clause, right? So whenever real estate changes hands and the bank doesn't know about it, sometimes they don't care as long as they're getting their money. They don't care what's going on with it. But I don't want to say they don't care. What they don't know, right? But what happens is, let's say that you do a subject to, and I'm going to tell you what it is, and then the bank gets wind of it, somebody stops making the payments, and then they find out that you transferred or assigned your ownership to someone else and you didn't tell them, then now they're going to take that $200,000 mortgage that you owe them and they're going to call it due on sale, due right now. So remember, a mortgage can be 15 years, 20 years, or 30 years. But if the bank calls the note due on sale, they're like, we want our money right now. Why? Because you did something to violate the note, to violate the mortgage, to violate the deed. You violated the law, right? Because it's in your documents. So it's subject to is what some people will do. It's called subject to the existing mortgage. So it's similar to an assumption in that you step in as the seller. So let's say you're talking to John Doe and John Doe is like, geez, I got to move. I got to get out this mortgage. I don't want this home anymore. I'm done with this house. And you say, okay, well, how much are you paying every month? And they say, I'm paying $2,000 a month. And you say, well, I got $2,000 a month and I'm willing to pay it. Then what you can do then is you start making the mortgage payment to the bank. Right. And as long as you all don't change anything about the documentation about who's responsible, you're just the one now mailing the check to the bank, right? Then the bank's probably not going to have an issue with it. But if they do decide to have an issue with it, this could cause a problem for the seller, which could then cause a problem for you, and it could create adverse reactions and legal issues. Okay. So I don't personally do subject to because I love my real estate license. So I'm not the person that's going to do a subject to transaction. I think it's messy. It can also cause clouds on the title, which affect the transfer of property. Okay. But that's the way that you can do it. Fix and flips. We all know what that is. That's the renovation shows. That's the fix and flip. That's the you buy low, sell high, right? So you can find fix and flip transactions all around you. It just depends on how much time, how much money, how much effort. Do you have a team? Are you handy, or do you know someone that's handy? Do you have time and no money, or do you have money and no time? Then you can figure out how to do fix and flip strategies. I talked about hard money last week, but I think I shared that's on the next slide. I'll talk to you about how you can finance your fix and flip transactions. Even if you have a 600 and higher credit score, you could probably still qualify as long as you have things in place that are needed to be able to do that. And then you can buy and hold. What does that mean? You become a landlord, right? So you can or you do the BRRRR method. So you purchase the house down the street in your neighborhood, and you do a little bit of cosmetic work to it. You don't have to do as much work on buy and hold rentals or properties that you're going to rent out as you would on properties you're going to flip, right? So of course you want to go in there and do the floor, make sure it looks good, carpet, tile, or carpet and vinyl. You don't even have to put a refrigerator because that's personal property. But you just want to do some touch-ups, paint it, make it smell good, look good, and then you lease it out. Right. And so every month as the tenant is making the mortgage payment, I'm sorry, the rent payment, they're paying down your mortgage payment. You're also getting potential tax benefits through depreciation. So buy and hold, if you have the bandwidth to be a landlord and you don't mind people calling you when something breaks or having to go when something goes down, or tenants that tear up the house and leave in the dark at night, if you have the stamina for that, buy and hold is like the tried and true of real estate investing. Also, so is the BRRRR method, right? So that's where you buy, renovate, rent, refinance, repeat, right? So there's the BRRRR strategy. The only thing that scares me, makes me nervous, I shouldn't say scares me, but makes me nervous about the BRRRR strategy is the refinancing part, because when you refinance, you pull the money out, so you then go buy the next property. But you end up at some point, in Garlinda's opinion, you can become over leveraged. And what I mean by that is you can have so many loans out there that what if all the tenants, well, I know it may not happen, but what if the tenants walk away, stop paying, you're responsible. And so there's the downside to that. So I'm not necessarily a fan of the BRRRR strategy, but I know a lot of people do it. And right now, I would think with the way the economy is, some of them are probably looking at their strategies saying, okay, I may need to incorporate a few other strategies as well. Just my thoughts. What is a joint venture? So a joint venture is where you have time, somebody else has money, you have money, somebody else has time. You all decide to create a partnership and come together and do real estate together. Maybe it's for one transaction, maybe it's for multiple transactions, maybe it's for buy and hold, fix and flips. Um, whatever it could be. It could be new construction because you know you can build new construction to rent it out. Shout out to a girlfriend of mine. She just shared with me that's what she and her mom were doing. And so the sky is not even the limit. The heavenlies are the limit. The mesosphere, the troposphere, the ionosphere. Those are the limits, right? Not the sky. You can go as far and as wide as you want to. But a joint venture is a documented agreement where everyone has a role. Your role is this, my role is that, and this is what we're going to do together to accomplish this real estate activity, this real estate task, etc. Right? So a lot of times people will say, well, nobody wants to do anything together. Well, that's not true. I don't know who you're talking to, right? And I don't say that to be mean, rude, or funny, but whenever the numbers work, there's somebody that wants to do the deal. It's just a matter of meeting new people and finding new people that have access to what you want to do the deal. But if you're dealing with people that you already know their mindset, that's not on them, that's on us. Right? So you got to go meet new people because when the numbers work, the money's there, you can find the money to get your deal done. Okay. Assumption we already talked about. Arbitrage. So arbitrage is close to a low money down. So we talked about this last week. So let's say that you're in an area where Verbo and Airbnb, Verbo and Airbnb aren't yet oversaturated, or there's a lot of demand for short-term rentals like Fayetteville. I didn't even realize we had so many people here. I thought we had about 285,000 people. There's 339,000 or 369,000 people between the county and the city, and maybe more than that, not factoring in our veterans and their families on Fort Bragg. So this is a huge opportunity area for arbitrage, right? But you got to do, let me say could be, I'm gonna say potential, right? So and that's because you have families coming in to visit their soldiers. You have spouses coming in if they don't live here with their soldiers. You have training events on Fort Bragg. You have Fayetteville State, Methodist College, FTCC, Spring Lake, FTCC Fayetteville. You have Campbell Fort Bragg. And so you have all these high school games. You have college games. You have a new sports complex just came out to Hope Mills. You have executives for different industries here in Fayetteville and on the outer skirts of Fayetteville. So you have executives coming in. You have Cape Fear Valley is expanding. So you have a higher demand for nurses and doctors, traveling physicians. So you have interns, you have international students, you have all these things. Fayetteville State has a housing shortage, right? So you have all this opportunity here for you as an investor. So if you do, once you do your research, you can start on AirDNA and you can just say, what's the profitability or potential in my area as an Airbnb host or as a Vrbo host or as a short-term property owner. And then once you've done your research, you could do arbitrage. So let's say you see a house for rent or an apartment for rent or a condo for rent or a townhome for rent, and it's in your area where you've determined this is going to be my radius of performance, where I'm going to buy and invest in real estate. Then once you've identified that there's an opportunity there, you could then go and you become the tenant. With the permission of the landlord and written in your lease, you could share with them, hey, you asked for $1,500 a month, right? You agree to pay them $1,500 a month, but you let them know I'm going to be renting this property out nightly, right? At a nightly rate of whatever. And then, so that means they're going to get their $1,500, but you're going to get your nightly rate. And let's call the nightly rate $89 a night because I don't want to be overzealous. So $89 a night times 4 nights is $356 a week times 4 weeks is $1,424 a week. I'm sorry, a month. So let's say that let's just call it that you pay $1,000 a month because that the example won't work if I don't. So let's say that you're paying the landlord $1,000 a month, but you're leasing the property out to the point where it's making $1,424 a month. Your profit net, your profit gross, I'm sorry. So overall profit before any expenses come out is $424. And that's if you have a low nightly rate like that. Okay. So that's how you can make your money. And all you gave up was the first month's rent, $1,000. You make your $1,000 back in about 2.5 months. And then everything you make from there is profit, and you don't own the space, you're a tenant subleasing the space. Now, with the arbitrage, when you're going to do short-term rentals, if you're going to do rental arbitrage, you do have to have the property furnished. I talk about how you go about doing that in my investor course. And so now we're at 8:14, so I'm going to wrap it up. These are the hard money lenders that you can use if you're interested in being an investor and you're like, how am I going to pay for this investment? How am I going to participate in investing in properties if I need money? So Kiabi, I use Kiabi. I love them. They're easy to work with. They make the process super simple and easy because I'm like, hey, I need y'all to dumb this all the way down, because when you're borrowing people's money and you're using other people's money, you need to have an understanding. So I needed to be simple and easy. So I use Kiabi. I have a friend, one of our best friends, mine and Marvin's, and he uses the Burr method. He uses Easy Street Capital. So he loves Easy Street. He talks highly of them all the time. And I had considered Easy Street, but because I had started my relationship with Kiabi, I just kept going with them. So he speaks very highly of Easy Street. They're probably on their fifth or sixth deal. Maybe they're 10th by now because I hadn't talked to them since earlier this summer. And then Lima One, I've not used, but I did research to see, okay, who else is user friendly if you're a first time real estate investor and you want to borrow hard money. And Lima One is a good company. Okay. So where should you buy? What do you like? Do you love to travel? Are you someone that likes college and university towns? Are you someone that likes the city and you want to do arbitrage in the city? Now, keep in mind, every state has rules around um, short-term rentals, long-term rentals, vacation rentals, Airbnb. Every state has rules around what you can do: glamping, camping, RVs, trailers, mobile homes, modular homes. So do your research before you buy a property and decide on the strategy and then figure out, okay, I can't even do the strategy I want, and now you're stuck with the property. So you have to do your research. But where do you want to be? Do you want to be overseas, right? Do you want to, or do you want to have a tropical destination and be a tropical investor, right? Like Florida, Mexico, Bahamas, Virgin Islands, right? New Mexico. Do you want to invest there? Costa Rica, Dominican Republic. Or do you want to do glamping sites and yurts? Do you want to be out in the Grand Canyon or near the national parks? Those are really great investment opportunities if you can research the area and figure out where, like Joshua Tree. I can't remember where Joshua Tree is, but a lot of people own Airbnb and rentals out there because people want to go out. They want to camp. They want to be under the stars. They want to watch the Aurora Borealis, depending on what part of the country you're in. They have reasons for wanting to go to these national parks. And so land near national parks may make a really great camping, glamping, off-grid camping. Some places for raw land, like we just my dad had a piece of land in Onancock, Virginia, and I'm gonna share the story, then I'm shut up. So Onancock is a rural town in Accomack County, which is in the Chesapeake Bay area of Virginia. So if you cross that long bridge across the Chesapeake Bay from Maryland or from Norfolk area into Accomack over in the Chesapeake Bay, that's where the land is. So we wanted to keep it, my sister and I. We were just like, Daddy, let us keep the land. But my daddy wanted to sell it. So when I put it on the market, I called the town to say, hey, what's the draw here, right? Because my mom said it's a small town. There's nothing there. Nobody wants to go there. And I was like, I don't know. That doesn't sound plausible to me. Maybe it's true, maybe it's not, but I'm a know-it-all, right? So I called and I was like, okay, tell me. I called the county. I said, tell me about Onancock. Tell me about this area? Why do people come here? And he began to tell me about all the people that come there to bird watch and all the executives that come there to get away, to be off the grid, that people would consider camping where they have disposable porta potties, right? Which the where they it's off the grid. So not everybody wants to be in a high-end glamping site. Some people are in RVs, they're in fifth wheels, but they go there to get away from it all. And it is a national bird watching sanctuary. It has a national park. And so people go there. People go to the Chesapeake Bay, and it's 45 minutes from, I think this was 45 minutes. No, it's like 15 minutes to like the Chesapeake Bay, but it's 45 minutes to Chesapeake. I forget what part of what it's called, but it was a great area. And so I'm like, why can mommy and daddy keep this land? But anyway, when I started doing the research, I found out, okay, it could be used for all these different things. Then I also spoke with someone that had land in Georgia. And I said, tell me about your land. And then we're going to do some research, right? And find out what you can do with your land. So they told me where it was. It didn't have access to water. It didn't have access to sewer. It didn't have access to any of those things. And I said, had you thought about a cemetery? Like, had you thought about a graveyard, depending on what town is near there? And they said that the Holy Spirit had given them an idea for it to be a graveyard. So if you own land and you're like, what can I do with this land? I encourage you, call the county, the city, the municipality where you own the land, or call me, your favorite real estate broker, from the capital to the coast, your realtor for life and beyond. I'm your global realtor for life. And I will find out what you can do with that land, right? And even if you have to apply for a land variance, right? Normally that's a small fee that you pay the city or the county. You present them your plan and then they vote on it, right? So anyway, I hope this has been helpful to all of you guys. I just invite you to become one of our successful buyers, one of our successful sellers, one of our successful investors. I have put my contact information in the chat. I'm going to do it again. Hold on one second. Oh, it won't let me. But if you look in the chat, I've included my digital business card. Just click on the link. I've included my Calendly link for you to schedule an appointment, even though it says insurance for real estate as well. And I have included my buyer consultation or seller consultation form you can complete and fill out. And at the end of that form, it'll let you schedule an appointment as well. Or if you're just like, Garland, I don't want to go through it, I don't give you a call. You can call me or text me, 910-494-7798. I've had so much fun talking to you tonight. And again, next Monday, it's going to be investor only. It's for my investors. We're going to talk about investing in land. That's the first thing we're going to talk about next week, because even though we've touched on it, we're going to do a deep land dive. Okay. So God bless you. God be willing. I will see you next week. And I love you guys. I'll talk to you soon. Again, I'm Garlinda Price, broker and owner of Fusion Properties, LLC, your realtor for life. Talk to you soon.